Hi everyone, and welcome back to the Later Life Show with Matt and Jade, proudly brought to you by Equilaw, the Later Life legal specialists. I'm Jade.
And I'm Matt. Each week we try and break down some of the key topics around later life lending, planning and protection, all in plain English. Today we're going to explore a common question: what is the difference between equity release and a retirement interest only mortgage, which is sometimes called a RIO?
Let's start breaking each one down. Equity release, which is usually through a lifetime mortgage, and this is available if you are over the age of 55. You can take a lump sum out of your property, and this can be repaid upon death or when you move into long-term care, and you can make repayments as you go along if you want to. Retirement interest only mortgages, also known as a RIO, are also aimed at the older homeowners. This is more like a traditional mortgage, and for affordability purposes, your pension income is taken into consideration. You make monthly interest payments, and then the loan is paid when you either sell the property, move into long-term care, or upon death.
And here are the main differences side by side. Firstly, minimum age. For an equity release plan, you usually need to be aged over 55. For a RIO mortgage, there's usually no set age, but they tend to be available for borrowers aged over 50. Repayments. For an equity release mortgage, no repayments are necessary, although often clients do make voluntary payments. For a RIO mortgage, monthly interest payments are mandatory, and you can also opt for capital repayment options as well. Next, affordability checks. With an equity release plan, there's usually minimal affordability checks. With a RIO product, usually a full income and outgoing assessment is made and credit scoring is involved. Next, how's the plan repaid? With an equity release plan, this is usually paid on death or when you move into long-term care. With a RIO plan, it's usually the same, but often interest has been paid during the lifetime of the mortgage. Next, loan amount. For an equity release product, it's usually calculated using the client's age and property value. With a RIO mortgage, it's based on income and affordability assessment. And lastly, inheritance impact. With an equity release plan, this can greatly reduce the value of your estate on death. However, with a RIO product, it's usually less as interest has been paid during the term of the mortgage.
An equity release might suit somebody if they don't want to make any monthly repayments, if they want to stay living in their home, and if they don't have any surplus income but they've got value in their property.
Whereas a RIO mortgage could be better if you have a stable retirement income, you don't like the concept of roll-up interest, and would like to reduce the impact on your estate.
We recently helped two different clients in very similar situations, and one of these clients decided to proceed with a lifetime mortgage because they didn't want to make any monthly repayments.
Whereas the other had a really good pension income and preferred a RIO mortgage so they could manage the interest payments themselves and protect more of their property's value for their children.
So it really comes down to your individual goals, your finances and your longer term plans.
Neither option is really better or worse, they're just different product sets for different kinds of clients. What matters is really getting that clear financial advice from a qualified broker, as well as seeking out top quality legal advice.
And making sure that the product you choose suits your lifestyle and your income and future goals, especially when it comes to inheritance and leaving something behind for the future.
So if you're unsure which option is right for you, or you're just starting to explore your later life lending options, we're always here to help. And as always, just our usual disclaimer that today's content is for general information only and doesn't constitute legal or financial advice. Always speak to a qualified solicitor or mortgage broker before making any decisions.
Thank you for watching the Later Life Show with Matt and Jade. Please like, subscribe and share this video to anyone that may be considering or weighing up the options of which retirement product to go for.
For more information around what we've talked about today, or if you'd just like to know more about your later life lending options, please feel free to visit our website, which is equilaw.uk.com. See you next time.
Bye.
Outtakes.
So let's break the both down. Oh no, that sounds silly.
Break the both. And lastly, inheritance. I'll just start again. What's those lights?
Stop blaming the lights. You've been doing this for about an hour and only now. Oh,
It's the light. It's the
blinded by the
lights.
lights.
Whereas a RIO mortgage could be more suitable if you've got a stable income. Have I just forgotten that second line already?
So it really does come down to your individual goals, your long-term plans.
And your finances.
Oh, Matt's singing again.
Just our usual disclaimer as well. Today's content is for general information only and doesn't constitute legal or financial advice. And as always, please get qualified. No.
Just get self-qualified.
Just get qualified.
Just get qualified yourself, you'll be fine.